Here we go again. Gamestop surging today, up 50% at one point after the company said Chewy co-founder and board member Ryan Cohen will lead its shift to e-commerce. Well, the mania around trading in GameStop sending Robinhood to new heights recently, the popular investing app adding scores of new customers in recent months, also drawing fire, though, and a lawsuit for how it operates. So is it gamifying stock trading and leaving millions at risk of major losses? That's the big question. Let's go back to our panel. All right, Trung, what do you think? Robinhood, good, bad, or what?
I think it's a pretty complicated. It's not black or white. My answer would be that they are not doing anything that's particularly different from a lot of the other brokers. I mean, you will get notifications and bell ringings from Fidelity, from Schwab. I mean, everybody's doing some type of gamification. Robinhood went a little bit far with confetti, which I will admit. And they're probably getting scared, too, because their whole thing was, we're going to democratize finance. And as soon as you kind of stick that this is your mission statement and you kind of do something that looks the opposite of that, you're going to get scared. And that's exactly what happened on that day when they basically pulled the trades on GameStop. So I think Robinhood, if they will have to rein in something, it might be the margin and the options trading. A lot of new investors don't understand that. But if you're talking about, are they worse than the other brokers? I don't think they are. Yeah. Well, Bill, you've been around the street. You've seen a lot of action. Is there anything wrong with what Robinhood's doing? I mean, this is a retail renaissance. This is the company that's made it happen. That's a good thing, isn't it?
Yeah, people have been talking about the democratization of Wall Street and democratization of capital for about 50 years, Scott. Since the Big Bang, with brokerage fees going down. Sure, a lot more people can trade, but frankly, I'm very, very concerned. I mean, look, the YOLO types, they want to go all in on GameStop and have a good time and ride it up and ride it down. Eventually, these stocks are going to trade on their fundamentals. And yes, the reason I say a GameStop is going crazy today is because maybe they're actually organizing a committee of directors to think about what their real business plan should be and how to take advantage of their high stock price. They should be issuing equity and changing their business plan completely, recapitalizing this thing. And maybe that's what investors are hoping for. But for me, it's like a total scam. It's a total flash in the pan. It has nothing to do with fundamentals. It has everything to do with sort of this trading fantasy that people are engaging in. And frankly, it's a bit of a shame, but, hey, it's a free country. If you want to do this, do it. Fine.
Well, what role does Robinhood have in that? Right? I mean, everybody takes risk when they buy stocks, right? Is it Robinhood's fault that younger investors are going on their platform, Bill, and using it to buy GameStop or anything else?
No, it's not their fault. I mean, they weren't properly capitalized. They may be better capitalized this week than they were, say, a month ago. They halted trading. No exchange is going to be very popular when it halts trading. So, they're a young exchange. They've got a lot of growing and learning to do. No, I don't really necessarily blame them. This whole phenomenon, I mean, to me, it's like what happened with Hertz, what it was a year and a half ago when the bankrupt stock of Hertz started trading up because, people thought they maybe could make some money. And the SEC had to step in and say, hold on, guys, not so fast. And frankly, that's what needs to happen again with GameStop. And maybe Gary Gensler, once he gets confirmed, will step in and stop this shenanigans.
Michelle, last word on this segment to you.
Yeah, I just don't think this is predatory. I think generally, it is really great that a whole new generation of people have learned about the market and how to train off the market. Sure, all day long they can YOLO and say these are meme stocks and, gotten their fundamentals from Reddit. But at the end of the day, once you've lost a couple of bucks yourself, I think you take things way more seriously. And so what this generation is they effectively took people that were in fantasy football and in gaming and spending time there and say, did you want to learn about the market? Did some people lose money doing that? For sure. Was there not the fundamentals behind GameStop? There was absolutely not the fundamentals there. But I think generally, teaching more people about the markets is a good thing. Did they probably go too far? I mean, it's like single day settlement. That's probably okay. And fractional shares, that's probably okay. Margin trading is pretty advanced stuff. Probably not the things you want to do in your first couple of trades. And so that's probably where I think this might be pulled back. But generally, I'm very pro democratization of access to trading and making your own mistakes with your own money. And you certainly learn the absolute fastest that way.
Okay, so maybe a couple things okay, maybe one or two things that are not okay.